The last FOMC minutes signal that the Federal Reserve will not start hiking interest rates until inflation is firmly on the path to 2%. The Fed officials agree that they will need to raise interest rates by 50 basis points at their next two meetings. However, after that, the Fed will likely be very data dependent. The Fed has had an eye on financial conditions more widely in the US, and investors have been worrying about a coming US recession as earnings from companies like Walmart and Target signal that discretionary consumer spending could be falling and companies' profits could be hit by surging inflation. So, if the US economy does take a further turn slower, then a September pause in hikes could be ahead. So would that mean that the S&P 500 starts to gain early in anticipation of a Fed on a pause? Now the S&P 500 seasonals do tend to strongly favour gains into the year end. You can see here in the S&P 500 that over the last 25 years, the S&P 500 index has gained 19 times between October the 8th and December the 31st. The largest gain was over 28% in 1998, and the largest fall was 13% in 2018. So are there more gains to come again this year on expectations of the Fed potentially hitting pause on hikes around September? We will have to see. However, this strong seasonal pattern is worth being aware of. Major trade risks. Any significant news that changes the monetary policy outlook for the Fed, like surging inflation that requires more rate hikes, will change this outlook. You can analyse these charts for yourself by going to seasonax.com and get a no strings attached 3-day free trial. Which currency pair would you most like to investigate for a seasonal pattern? Remember, don't just trade it, Seasonax it.